And circling back to India's inflation, latest figures showing consumer prices rising at the fastest pace in around 6 months. Shreya Sodhani, a regional economist at Barclays, joins us now. Shreya, what do the latest figures from India tell us? Is monetary policy tightening on the cards?
Good evening, Lizzie. So the latest inflation figures from India is 5.6%, quite a big jump from the November inflation, but still lower than Bloomberg consensus expectations of around 5.8 to 5.85%. Compared to our expectations, the core inflation was in line, while food and fuel prices were lower. This inflation print was partly due to an unfavorable base effect, which is likely to continue through all of Q1, which means that Q1 inflation will be close to the RBI's inflation target's upper band of 6%. Still, the RBI has been quite flexible with its inflation target through all of the COVID-19 pandemic, prioritizing economic recovery and growth. We expect this approach to be maintained. While the RBI has set a modest path for exit from accommodative policy, we think growth concerns will still remain front and center in its deliberations. We had expected a 20 basis point reverse repo rate hike in December, which did not materialize. We think in the February meeting, given higher inflation and if growth risks from the Omicron variant dissipate, the RBI will go ahead with the 20 basis point reverse repo rate hike. Following after that, we expect repo rate hikes in Q2 and Q3 if growth recovery remains durable.
Well, Shreya, India's budget is set for next month. What could we see then?
The budget, in our view, will also likely continue to prioritize growth, still since India remains in the throes of the pandemic and cases are still rising very rapidly. The priority will be given to growth recovery, while fiscal consolidation will continue only gradually. We think the government has amassed large amounts of revenue due to quick economic recovery and taxes in the form of higher GST, corporate income tax, and personal income taxes. Along with fuel taxes, with fuel excise duties were hiked early in 2020. With this large amount of revenue, I think the government will have enough space to expand expenditure in order to provide support to growth, especially in the form of welfare spending programs such as higher food subsidy outlays, higher fertilizer subsidies, higher guarantees for jobs. Apart from that, I think the production-linked incentive scheme, which is a relatively new scheme of the Indian government to support manufacturers and incentivize them to produce more, will be a large pillar of the expenditure. Alongside, capex expenditure should also continue in order to support growth more durably.
Thanks for that, Shreya Sodhani at Barclays.